Hey everyone, just give me one moment as I get everything ready here. All right, we are good to go. So, folks, thanks for tuning in to this episode of Back to the Futures with me, Markets and Mayhem. We're going to be looking at a number of different instruments today: stocks, futures, commodities, really going across the board. Should be quite a bit of fun, but first, got a couple of things to get through first before we get the whole presentation started here. So, a little bit about me. My trading journey began in 2005, funding my own account, trading stocks, and then moving on to options, futures, and Forex. And really cut my teeth during the great financial crisis, which was quite a lot of excitement, pain, fun, big gains, big losses, the whole early trader journey thing. I went through all of that, and really the biggest lessons I took away from that on the longer term of trading was that macro and momentum equal opportunity. You can't have one and not the other for a really good longer term trade setup. But for the shorter term trade setups, I also learned a lot about the ideal ways to manage risk. And really, that comes down to be sure you always have dry powder for the next trade. Because even if you think you're 100% right about something, you might not be. And so you always got to be ready for that next setup on whatever time frame you're on, but especially that short term where you might be churning out a lot of trades in a short period of time. So my approach is systematic. I look at momentum, I look at price action, options flows, positioning, as well as volume profile. When I'm trading on various different time frames, I trade intraday all the way out to swing. I also do a lot of investing. Investing is really the key. When you make money trading, you should invest it, right? So it's not about like getting your trading account to some obscene number. It's about consistently making profits, parking them in investments, and having those investments grow over time. So that's sort of the way I do it, to try to make sure that there's always sort of a nest egg that's growing from those trading profits. And if trading profits aren't happening, then that's a question that you've got to ask. What's going wrong? Why am I not making profits? Obviously every trade's not going to win, but you got to cut your losers quickly. There's nothing wrong with being wrong. There's everything wrong with staying wrong, right? So I began working with Bookmap in early 2022 because I saw great value in the way their platform, and including really especially the heat map, icebergs, and stops, illustrated what's happening in the market, right? You can always have a DOM, and that they're useful, and traders use them and gain value from them, and I can absolutely appreciate that. But what I like about Bookmap is really the ability to dive into both where liquidity has been and where there's interest. That for me has added a lot of value. That's one of the reasons I have it running every single day, even if I'm not trading, just to get a better sense as to what's going on in various markets. And after using Bookmap for, really several years and incorporating it into my trading and seeing the growing role of options and how important they've been for price discovery across the whole S&P chain, single stocks, ETFs, etc., I built a tool called the Advanced SPX Options Visualizer that focuses on the index options in the S&P 500 and visualizes them in S&P 500 futures levels on screen. So we'll look at that once the market starts trading. And then everyone's favorite part here, the disclaimer, the disclosure. All Bookmap Limited materials, information, presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And if you'd like to follow my work, you can check me out on Twitter and on YouTube. Same name, Mayhem number 4 Markets. Mayhem 4 Markets is my username. You can also find my trading ideas, coaching, and tools at TraderAid.com. For the advanced SPX options visualizer I built for Bookmap that you'll see as we get into the cash trading session, you can find that at TraderAid.com/SPX. And my long-term trading and investment ideas, research, and consulting services are available at macrovisor.com. And I live stream regularly, including for Bookmap every Tuesday at 9 a.m. So be sure to come back and join me regularly here. And now we're going to move on to Bookmap on screen here. So just give me a second to get all settled into this. And folks, while I'm streaming here, if you have any questions about anything, feel free to ask at any time. I'll be checking around on the YouTube channels and elsewhere as we go. And of course, on the Bookmap Discord. Good morning, Stephen. Hope everyone else out there is having a great day. Thank you all for tuning in. All right. So going into today, I think, just a little bit of a holiday shortened trading week causing much lighter volumes. Yesterday had pretty significantly light volume. Some said it was the lightest volume since the day after Thanksgiving. So that's going to increase the potential for intraday volatility. And what I mean by that is when there's less overall participation in the market, and you can see the order book for the S&P only has an order book depth pre-market of 38,000, which is still low even for pre-market. That tells you that you could have a little bit more erratic price discovery, right? What do I mean? So if there's less people participating in the market, it takes less volume to move the market. That increases the distribution of tail risks in either direction, right? So it's something that we have to factor in. If we're going into today hoping to set up some day trades in US equities, whether it's futures or stocks or ETFs, we need to be aware of that trading environment. And for me, what that means is less liquidity amplifies the potential for volatility. Higher volatility potential means I take smaller position sizes and I'm much more careful about what trades I take. Okay? So in that environment, I think it behooves us as traders to be a little bit more cautious because we don't know if we're going to get this sort of fills, if we're going to deal with slippage, what kind of moves that we might see realized intraday. So I prefer to be just a little bit more careful in that environment. Now I'm looking at 52.36 on ES on the front month contract is really a key level. I don't think we'll get back to that level today unless we see some pretty serious selling. But that's a level that I'm watching with interest as a potential pivot, because if we do move meaningfully below that level and build acceptance, I think that sellers can take control on an intraday time frame and push things lower. And we do have a gap down there we could potentially look at filling. But overall, I'm looking at that as sort of my decision zone. So for now, buyers are in control, right? We could see that with overnight futures. The implied open here is, a gain of SPX going up about 0.25% as we sit here at about 9:10 a.m., 20 minutes before the open. NASDAQ implied gain of about 0.33% on cash at the open. And looking around other commodities, we've got oil bid up just slightly to 82.20. We've got cocoa, which is settling off its highs. It was above 10,000 earlier. Cocoa outperforming so many different assets. Just absolutely alarming. Trading like a cryptocurrency, really. There is a story with cocoa. And the story is that there's been droughts, there's been disease that's harmed crop yields, and on the other side, speculators, hedge funds, are absolutely piling into it. So that's one of the reasons it's become so overheated. We've also seen some resilience coming back in some of the agricultural commodities that are grains, soy oil, wheat, all starting to look a little bit more interesting here. And of course, Bitcoin recently topped 71,000. That's got the attention of many folks that are looking at crypto here. And of course, some of the peripheral sympathy plays in crypto. If you look at things like, you know, MicroStrategy yesterday as an example. So there's definitely trading opportunities out there. From my own perspective, looking at this from the longer term view, from a kind of quarter two view, is that if we continue to see this reacceleration of inflation as a theme, that there is some room for late cycle plays to excel here. So I would be looking at things like industrials, materials, utilities, even because of the growing power needs in this country, global copper miners, energy stocks. They all, on a swing basis, look very attractive to me. And if you all been watching my work here on the Bookmap stream and just overall, you know I've been pretty bullish on energy. Even when we were in the high 60s and low 70s, I felt we were going to go higher, and I've been advocating allocating to energy stocks. That's been some of the biggest plays that I've made in terms of reflation plays this year, and they've been pretty good overall, but I think we're still early stage because comparatively speaking, those are still pretty cheap parts of the market. So I still like that. So let's look around as we get ready for the cash open here. First overnight session, we can see this in the S&P. We had a nice little bid. It pulled the point of control higher. Now we're starting to see that rolling over a bit here pre-market. Now, this has gotten back to the level of interest we saw from SPX options buyers. That's where the highest level of call interest was on yesterday's tape. We can see that in the SPX options visualizer column on the right side here. So it is an area where we see interest yesterday. We're back to that level today. We'll be watching that as we get closer to the open and start trading. Let's take a look at the NASDAQ here. Pretty choppy, but let's see. Does it have the same look? Yeah, pretty much the same look as the S&P, kind of retreating to its overnight lows. Russell building a little bit pre-open here, but also kind of a similar look, but not nearly the level of weakness. In fact, you could argue Russell microstructure still looks a bit like an uptrend here, and it looks like it just made a higher low. So small cap showing a bit of resilience comparatively speaking. Crude oil, this one has been getting stronger overall, even overnight. You can see that there's a bit of a gradual rise in crude prices. And there are still reasons. If we have a world where central banks are cutting rates and economic growth is continuing, and goods production is starting to get back to kind of expansion territory, there's every reason for crude and copper and other commodities to run. Some of these commodities have risen over 20% from their quarter four lows. So what that's telling you is there is a reacceleration of inflation in some key areas, and crude is a beneficiary of that reacceleration of economic growth and stimulation from central bank cutting led by emerging markets. And here's gold. Gold has been absolutely bonkers all over the map. We did see a bit of a bid overnight. We're coming off that bid here just a little bit, but overall, this also looks like a microstructure uptrend, and we just appear to have made a higher low in gold. So gold's setting up pretty nicely today overall. Let's look at the twos. Probably not terribly exciting, but we are seeing some selling here in the twos. Now, just for folks out there that aren't super familiar with how these trade, these are in futures for Treasury 2-year notes. So when the price of these futures goes down, the rate on those 2-year notes goes higher, right? And so when we see those rates moving higher, sometimes that can put a bit of pressure on equities. We're seeing a little bit of that this morning. Let's take a look at the 10-year note. Similar look here as well, a bit of a draw here. We had some economic data come out this morning with durables. They came in stronger than expected, as I recall, and I think that's putting some upward pressure on rates, and that's giving equities just a little bit of skittishness ahead of the open. Let's take a look at the euro here. Euro not quite as sensitive to that data release, just sort of chopping sideways pre-market. And we've got the yen. Yen is weakening a bit versus the dollar pre-market here. And we'll look at a lot of these stocks as the market starts trading, but we'll take a quick look pre-market around some of these names as well. We have NVIDIA on screen. We can see there's a pretty large amount of resting liquidity at some of these key numbers that we'll be watching. 960, where there's been interest in calls. We are seeing it build there, but really 965. And as we zoom out, the bigger numbers have some really large resting liquidity, like 1,000, right? 1,000's got 46,890. 898 on offer, right? That's a pretty big offer there. That is also an area where there's been a lot of options interest in this stock. So just an area to watch. But overall, NVIDIA has continued to move higher. And the AI conference, the announcement of the Blackwell chip, continuing to give bulls some optimism on the stock. We also saw a little bit of a reset in the extended skew dynamics and calls on NVIDIA, basically allowing buyers to step back in with a little bit less resistance, a little bit less distributive flows. SMCI is also starting to climb back up. It has not made new all-time highs like NVIDIA, but it is well off of its lows after it did that dilutive offering. And Meta has been one of the terrific two this year. If we look at the Mag 7, they've kind of shrunk to the terrific two overall. And to me, what that's really telling us is that leadership from, what was once Apple, Alphabet, Tesla, Amazon, Microsoft, NVIDIA, and so on, that's shrunk to really Meta and NVIDIA in terms of that component of mega cap growth in tech leading the way. And of course, we see Tesla really is one of the worst stocks in the S&P. I think it is the worst stock in the S&P 500 this year. Apple really can't catch a break, and Google's trying to fight being the odd one out of the it used to be a member of the Mag 5 club, right? But I think we are really down to the terrific two in terms of that's where the most leadership is. It is hinged on this AI story. And we need to see something kind of validate that. I think we need to see, in my view, earnings for this quarter start to show companies attributing bottom line expansion and productivity growth to AI, so we can say there's some real staying power to the story. But nevertheless, that's the terrific two, and that's the story there. And we do see some little bit of weakness to some of these heavier weighted stocks pre-market, just flashing across the board here through Meta, Amazon, Microsoft, Apple, Google, and Tesla here. Now, Tesla is above a pretty key level. I still like watching 177.77 as a key pivot for the stock. It has pushed above there, but it is still overall in a downtrend. Let's see if the Bitcoin data is working here. No, it's still saying connection is lost. We'll revisit that next week. I do want to start covering Bitcoin on here as well. And we do see a little bit more selling pressure coming in pre-market here. We're just about 10 minutes away from the open. And so the durable goods order this morning, just going back to that, the actual print month over month was 1.4% versus a forecast of 0.7%. So that was a pretty big gain. I think that was one of the reasons we got a little pressure upward on rates. We also got Johnson Redbook year over year. Actual came in at 3.9%. Prior was 3.4%. What's interesting, however, is if you look at retail sales with a little bit of nuance, what you see is they're actually, in real terms, not growing, right? So that's a bit of an issue, because if you're looking at the consumer and saying, wow, everything is so great, they've never done better, that's true of the top quartile. Top 25% are absolutely loving it. The bottom two quartiles, not so much, where interest spend is really surging on their credit cards as they've been using them to fill the gap in the family budget because prices have gone up and wages have not really risen commensurate with that. And we see that in real retail sales. What that's showing us is if you net out inflation, people are paying more to get the same or less. So just something to take into consideration when you see those Johnson Redbook numbers year over year showing growth. It's not exactly what it looks like. It's a nominal measure, so it's not factoring inflation. And inflation, even though it has come down, is still a concern. We also got the home price index just about 22 minutes ago. The forecast for that was 0.1%, which was also the prior reading. It actually came in month over month lower at negative 0.1%. And coming up at 10, we'll get the Richmond Fed Manufacturing Index. And then at 10:30, the Dallas Fed Services Index. And then we have a 5-year auction coming up at 1 p.m. So that's today's event volatility catalyst calendar. And the 5-year auction, probably the one that has the most potential. But yesterday's too was not terrible. It did have a bit of a tail, but overall it was well received. Foreign bidders were at the auction buying up a fair amount. Now, I would also say that a smaller pivot today, as we're looking at S&P futures, would probably be about 52.80. Now, we see the midpoint on screen from yesterday's options interest around 52.85, but we also see the most active put right around 52.80, and there is still a reasonable amount of resting liquidity below there. I think if we do slip below 52.80, we do still have some room to the downside intraday. Right? That's another level that I would watch just based on the 4-hour S&P chart. And let's just zoom out a little bit here. So we can see we are making new lows from the overnight session to the present in the S&P futures. Got a similar look in the NASDAQ here as well. We're just about 5 minutes away from the open with all of this happening. And the Russell not really showing the same look. It's actually surprisingly resilient in comparison. So we'll go back to the S&P and we'll zoom in a little bit here as we get ready for that opening bell. Hope everyone out there is having a good week so far. It is a holiday shortened week. Remember that even though we get PCE data on Friday, it is Good Friday, so the markets will be closed. So be sure to kind of set yourself up for 3-day weekend mode here. Hope you all have some fun plans ahead. And once the market opens, we're going to get some more data that we can parse here. There will be more options trading in single stocks and ETFs, which I'll be looking at, as well as in SPX, which we'll see visualized on screen in the S&P 500 futures contract with my advanced SPX options visualizer. Usually starts to populate around 10-15 minutes in when there's been enough flow to really register. Looking around the commodity complex this morning off screen, coffee has got a pretty good bid, up about 2%. Sugar up 1.3%, cotton up 1.4%, lean hogs up 2%, gold's up about 0.75% here, and cocoa shedding some of its gains, now up just about 0.67%. All right, we're going to go ahead and follow along with that and just roll our gold contract over to June. And as I do that, I'm just going to spend a moment to kind of clean up the chart here. And just move the tab over to where I usually keep it, right around oil. All right, we've got less than a minute until the market opens here. We could see the heat map getting a lot hotter as we approach the open. Liquidity really coming back to the books, but not in a major way that would say, okay, we don't need to worry about vol, right? So we have about 35,000 order book depth just as we get to the open here. Now, S&P, when it's more liquid, has between 50 and 60,000. So it gives you a sense it's still a light week, still a light day. And we have just hit 9:30. The markets are now open, and that real lack of reaction in the S&P there kind of tells you how light it is. Usually you get a little bit more vol in that first, 30 seconds to a minute. We're not seeing it quite as much yet. Let's take a look at the NASDAQ here. And we're going to zoom in a little bit more here. It looks like it's trying to find a bottom, but so far I would be a little bit skeptical unless we start to build some acceptance really above 18,575. See, it's just pretty volatile here. And a 72 million imbalance to the buy side on market on open here. We are seeing NASDAQ now slip to new lows, but it's a volatile open so far. Take a look at the Russell here. Russell just doesn't care about the NASDAQ and the S&P. It's doing its own thing. I mean, some of this has to do with the way that the Russell is highly shorted, so it tends to do well when the other indices are not doing as well. But I think there's a little bit of a different story. There's also an increasing appetite for small caps. Oil here getting just a little bit more of a bid. We'll zoom in on this one as well. But it's starting to build a base here at 82. It looks like pulling up that point of control. We've got the new gold contract on screen for June. We do see a reasonable resting offer above us, but nothing too big. And then 2200, a pretty reasonable resting bid, as well as 2204 and 2208. Let's take a look at some of the most popular stocks that people like to follow, including NVIDIA. Pretty volatile trade so far in this one. Just sort of chopping sideways at the open. SMCI showing a similar look here, but a little bit more distributive pressure. Meta zooming out of the open here, up about $2.50. Amazon dropping a bit here, kind of continuing that pre-market look with a little bit more vigor. Microsoft chopping sideways, a bit more volatile. Apple dropping. Google chopping sideways as well. And Tesla, well, Tesla's doing what Tesla does. It is a bit more volatile as well. And then the semiconductor ETF getting a bit of a bid after a drop right at the open here. So we do see some buyers coming back into S&P futures. We see the point of control coming down just a little bit here, but the volume bubbles, the fact that these delta bubbles are becoming more green, that is showing you a little bit more buyer absorption of selling pressure here. And you're seeing that buying pressure build just a little bit. It's a nice reversal up above the point of control, now testing it. And you can see that heat map also getting hotter, more liquidity coming in, but it's still rather light. It's only 38,000 order book depth. See how the NASDAQ is faring here. A bit choppier as to be expected with the high beta beast cousin of the S&P 500. But getting a decent bid here. We'll zoom out just a little bit. We can see the point of control is quite a bit higher. We do have some interest here right around 18,620 overhead. Buyers putting in a nice little fight here. I like to look at the 20-minute opening range. So we're just starting to form that. We're in the first 4 minutes of forming that 20-minute opening range. So we'll see how that progresses. We also see a lot more call activity than put activity in the unusual flows, the signal stream that I tend to watch. We have calls coming in for NVIDIA, Micron, Citigroup, MicroStrategy, Tesla, SMCI, Square, Palantir, all across the board. Talking about millions and millions of premium paid. And on the put side, we just have Triple Q, Tesla, and Zscaler. So, you know, when the calls outpace the puts this aggressively in the unusual flows, it is usually bullish intraday. And we're looking at Tesla 180s for this Friday, about 125,000 in premium paid for those. And then another sweep for 180s this Friday, about 839,000 in premium paid for those. So let's take a look at Tesla. Some pretty interesting call flows coming through on that one here. Yeah, boy, there you go. You can see it in the price action. Those sweeps really helping to push the price up. A lot of targeting a 180 this morning if you just look across all the sweeps in Tesla. And now we got two tens printing for April 26, 142,000 in premium paid for those 210s. Tesla continuing to be bid here. Got Tesla 200s coming across. 392,000 in premium paid for those expiring May 17th. Tesla 230s, May 17th, 106,000 in premium paid for those. So we can see, when this amount of flow comes into a stock's options, market makers have to hedge their exposure. They're not just going to sell calls and risk all of that exposure, having to pay out a higher price if those calls increase in value. So they hedge their delta by buying shares, right? So when you get really aggressive call buying, it has an impact on the actual underlying asset. In this case, you've got market makers buying some of those shares, and that accounts for some of that pop we saw. And Tesla's skew is not too stretched, so it doesn't take an enormous amount of flow to really push this thing. Got some Microsoft 425s coming in for April 26, 125,000 in premium paid. And Tesla 185s, 405,000 premium paid for April 19th on the call side. So they just keep coming through on Tesla. In fact, this is one of the first days I remember in a while where we're seeing Tesla and Nvidia kind of competing for who has the most unusual flows. Micron 120s and 121s, about 672,000 in premium for April 5th calls. We'll take a look at Micron. That one's been a pretty big winner, and it's a beneficiary of the whole AI race here, as memory is pretty important. So let me just take a moment to get Micron on screen. We can see what's going on with that one. And I'll just clean up that chart. And see if we can backfill it by 2 hours or so. We'll give it a minute. And there's that 120. That's one of the strikes they were targeting pretty aggressively. 121's above there as well. Also see SMCI, Amazon, JP Morgan, and Nvidia calls all coming through. There's just such aggressive call buying going on right now. It's just lighting up my screen. MicroStrategy 2100s for this Friday. Triple Q 452, 383,000 in premium for April 19th. And on the put side, there are puts coming through. There are some Teslas, but it just pales in comparison to what we're seeing on the call side. Tesla 200s, 170 for April 19th. We'll go back to Tesla here, see what's going on there. It's building. This makes sense. I mean, look, the amount of sweeps that are happening in this stock tell you that there is a lot of interest. It is causing hedging pressure, and that pressure is causing shares to move higher. So we're going to focus on where the interest is because, hey, it's interesting. So for home gamers, you can always look at a service like Benzinga to look at call and put flows, and you can set up your own scans and things like that. I have data directly from CBOE that I'm parsing as well through a Python routine that I've developed. So that's something that I'm building on that'll eventually be a publicly available product with a little bit more fine-tuning capabilities. But there are some, basic scanners out there that you can use right now as well. Also, I'll be looking at creating single stock options tools for Bookmap as well. We can see there's a bit of a latency issue here with Rhythmic on some of the other feeds. So we're going to just stick to the stocks for right now as that works itself out. You can see Tesla continuing to build here. Micron not seeing the same kind of pressure, so it's really Tesla. I'm just going to quickly restart Bookmap as it has that rhythmic data issue, so just bear with me 1 second. Yeah, so what I was saying with the option sweeps is, again, there are services like Benzinga out there. We do have a great discount for Trader Aid members. I think you get up to 40% off if you're a Trader Aid member of Benzinga Pro, and it's not cheap. So actually, it's cheaper to become a Trader Aid member and get the discount. But yeah, that's what I would say is probably going to be your best bet as a home gamer. And then I'm working on a tool to filter out the flow that we can see it inside a Bookmap or with more customizable alerts. So that's something that you can probably expect Q2, Q3 of this year when I get done with that software development. Seeing Tesla 185s for this Friday coming through, about 160,000 in premium. S&P slipping a bit here. Really not a great look for the S&P this morning, not able to get off the mat. NASDAQ also slipping, although off of its lows for now. And Russell, wow, look at that. It just gave up the ghost completely. It was the relative strength performer pre-market and just completely gave it all up. You can count on Russell to do things like that. It is an absolute champion at disappointing people. Unless you were shorting it, then I imagine you're overjoyed. You can see Tesla still building that strength here. I don't really pay a whole lot of attention to dark pools, to be honest with you. I mean, maybe some folks can generate alpha consistently using dark pool flows, but to me, I don't have a really strong sense as to what's happening and why it's happening. So I don't necessarily put a lot of stock into that personally, because there's a lot more clearing happening on exchange than off exchange. So I'd rather just pay attention to what's happening on exchange. I personally think dark pools have been given way too much attention and significance. Root has some really heavy flows. This one had a big squeeze higher, and they're now targeting, looks like the 60s for May, but not seeing much of that in the price action of Root today. Probably because these are farther out options. But Tesla continuing to build. This has been a decent little pop here. We had that acceptance built above the point of control, and then we continue to rally on those aggressive sweeps. And that flow continues. We'll be watching that as the day goes on. We're just going to shift back over to U.S. markets here at the index level and look at the S&P. So again, just contextualizing this from the pre-market action, we've got this little bit of a pop off the lows, but overall, it's been kind of more of a consolidation here after sliding pre-market off the overnight highs and the morning highs. And we should start to see those most active options levels coming through any moment now from the SPX options visualizer. Bookmap Global is pretty awesome. I really like the stops and icebergs functionality for the S&P and NASDAQ in particular. I think that's such an important part. I mean, there's a lot of different ways of measuring, absorption, and there's a lot of different assumptions made about where icebergs are happening. I've seen traders talk about all different things about what they think is an iceberg, but what I really like about Bookmap and the way they contextualize the data and what comes through from Rhythmic is that you know what is an iceberg. It's not guesswork. It's not looking at a session volume profile and some big bump in it and saying, boy, I think that's an iceberg. Well, you don't know unless you see the order flow. And what's really cool about Bookmap is you do see that iceberg order flow, right? So there's no guesswork. And I'll be quite frank, a lot of the folks out there that are calling certain things icebergs on the volume profile, they're not icebergs. I'm just putting that out there. It's important to understand what an iceberg is. So let's talk about it. Let's say you're a really big institution and you've got to offload, $50 million worth of S&P futures. You can't just put that out there on an offer. If you put that size of an offer out there, you'll probably scare folks away. So typically what you're going to do to make sure you get better price, fulfillment on your order is you're going to hide the total size of what you're trying to sell. So if you've got 50 million on offer, maybe you hide it as 5 million on offer and you do 10 rounds of it. So what happens is with an iceberg, you're going to show that 5 million of your 50 million on offer. And every time that's cleared, there's going to be another 5 million that comes up until all 10 lots have been filled, right? So when you're doing an iceberg order as a larger trader, your goal is to get out of that trade at the best price possible without sort of showing the market your hand. So seeing that happen from those larger, less price sensitive traders is a really important part of the order flow. If you see really aggressive iceberg selling into a rally, you get a sense that some larger desks are taking profits there. And if a lot of small stops were blown out into that rally, you can kind of get a sense that maybe momentum is starting to get a bit more exhausted and we may have a good area to start taking profits into. And if we do see a momentum reversal in price, it can also be a short signal. So knowing what's an iceberg rather than guessing what's an iceberg is so important. So we do see twice as much interest in puts versus calls for SPX so far. And we see that also the asterisk by the hot put telling you something else. That's telling you that across the entire S&P chain, there is more put demand, more put transacting than there is call transacting. So I would say that right now what SPX options are telling us, and we're starting to see the hot call level perk up. Now we've got the midpoint painted on screen. What we're seeing is this is right now a market imbalance. It's no coincidence that the midpoint has been painted where the point of control is and where price is, right? So we see there's demand for calls up here, which would be ES 5320. There's demand for puts down here around 5260. But because that supply and demand is relatively balanced, my tool has created the midpoint on screen. And that midpoint is telling you that, we have three methods of analyzing an auction to understand the distribution of supply and demand. You've got excess supply, which is selling. You've got excess demand, which is buying. And you've got a market that's in balance, which is sort of, around the same amount of buying and selling, or around the same amount of demand for calls and puts. That's where we are right now. And that's why the midpoint is on screen, and it lines up pretty well with the point of control because you have that real convergence there. So for now, I would say that options are telling us this is a relatively balanced market for now. Thank you. Thank you. Still seeing that Tesla options demand start to pick up now, looking at 190 strikes, getting a little action. Let's switch over back to our Tesla chart here. Still seeing a bit more upward momentum being built here. Not necessarily the same level of interest we had before. And the flow into Tesla calls has also slowed just a little bit. Yeah, and if you do buy Bookmap Global, be sure to take advantage of the discount you can find in the description. You can get up to 40% off going through that affiliate link that we have. And the team at Bookmap are great. They've got tons of videos about how to set yourself up, about how to use the different tools they have. And of course, I'm here every Tuesday talking about how I use Bookmap. So we're all happy as a community here to help you get set up and make sure you get the most out of Bookmap. Tesla 185 is another 35,000 in premium paid for the April 5th strike. Yeah, the folks over there are great. They'll always take care of their clients. Anytime I have a question about Bookmap, they're able to provide an answer, and able to do it pretty darn quickly too. So we see Tesla continuing to build that positive momentum here, as we just saw more sweeps coming across. The 185 strike has been popular, and we see resting liquidity pretty strong there off the open as well. Another Tesla 185 sweep for this Friday, 119,000 in premium paid. Again, we're seeing the effect of that option buying in real time through Bookmap in the liquidity of the stock. Now, I'll build some individual tools for the Mag 7. I'll create options visualizers for those. That's kind of my next project, is to create something where you have the ability to see what we see in the S&P, but for these single stocks, and then also for the ETFs like SPY, IWM, and Triple Q. So more tools coming out soon. That's the next area I'm really focusing on. Let's go back to the majors here. I've got just about 5 minutes left. I want to thank everyone for tuning into this stream. I will be back on the Bookmap stream next Tuesday at 9 a.m. Eastern. Of course, if you want to learn more about Bookmap, check out traderaid.com/bookmap. You can get up to 40% off on that affiliate link and learn more about how the program works. If you're interested in the SPX options visualizer that visualizes these flows that are helping to move the market, you can check out traderaid.com/SPX. It'll bring you right to the Bookmap marketplace. Of course, you do need Bookmap, and you should be using either the ES contract with DX feed or Rhythmic to take advantage. And someone asked me on the Bookmap Discord, do I screen share on TraderAid? Yes, I do. I try to stream regularly. And then I also share trade ideas and educational resources about Bookmap, about swing trading and beyond on the TraderAid Discord. And folks, if you're interested in longer term swing trades and investing, check out macrovisor.com, where we feel macro and momentum make for great opportunities. And let's just zoom out as we start to wrap up the stream here. We can see that this has not been a particularly great session for the S&P. The NASDAQ just a little bit more resilient here, but still struggling nonetheless. Russell coming off of its lows, but gave up those pre-market gains. Crude starting to build a little bit after a recent draw. Gold above 2,200. Overall, gold showing some resilience here, maybe starting the next stage of a breakout. 2-year notes, well, not a lot to see here. This thing coming down a little bit after stronger than expected durables orders. Let's look at NVIDIA here. NVIDIA coming off of its highs, but still trading around 953. SMCI continuing this sort of idea of pushing higher. The stock had a beat down after it did a dilutive offering, but now it's trading at 1080 again. Meta coming off of those highs, that pop we had right off the open, being given back a bit. Amazon selling down a bit here, as is Microsoft. Apple pushing higher after some selling earlier. Google consolidating here. And Tesla, well, Tesla has been relatively strong, and we've seen it in the options flows today. And seeing more NVIDIA sweeps coming through, 960s, 955s, about 500,000 in premium paid for this Friday. And folks, if you have any questions about anything, let me know. You can always shoot me an email, mayhem@traderaid.com. You can message me on Twitter. My inbox is open. Whatever works best. I always want to make sure that folks that are watching get some value out of these streams. That's the whole purpose of me doing them. I want to try to educate, to share, to give us some insights about how I look at these markets, some of the intermarket relationships that occur as well. Remember, we do have a 5-year note auction coming up with results posting after 1 p.m. Probably not going to be a huge event, but it's always worth at least watching those auction results. So what you see now, Doc Holiday, is there's a plus at the hot call. So what that's telling you is this hot call is the most active strike on the entire chain, but there's no asterisk there because across the entire chain, there's still more volume in puts. And the midpoint is still on screen because overall, this is still an options flow paradigm that's relatively in balance. You got it. Just got about a minute left on the stream. Yeah, CB consumer confidence at 10 a.m. Not often a big market mover, but it is a good one to watch as well, particularly just looking out over longer term. How is the consumer feeling? We have had a mixed set of data about the consumer. The top quartile are doing quite well. The bottom 2 quartiles, not quite as well. This has everything to do with the top quartile being really asset heavy. So they're enjoying gains in stocks and real estate. They're also enjoying being able to park money in a savings account and earn 4 or 5%. Whereas the bottom 50% are more, having to deal with higher rates on their debt and aren't as asset heavy. So this has been more of a, I would say, challenging environment with inflation, not being forgiven. That is to say, prices haven't come down. While the rate of change has slowed, prices are still moving higher. Yes, that is all part of Bookmap. If you look at the screen here, you see the current order book. That is everything that is on offer above and everything is on bid below. So offers are red, bids are blue. You've got the session volume profile, which shows you where there's been transacting in the market, right? So you can see where there's been a lot of buying and selling. Buyer, these are all deltas. So buyer excess is in green, seller excess is in red. And then the SPX options visualizer is a tool that I created, which is available in the marketplace on Bookmap. So I want to thank everyone for tuning in. Really appreciate it. Hope you found this enjoyable and useful. The recording will be available immediately after it closes. So if you didn't catch the whole thing or if you wanted to review it again, please be my guest. And to find more about my work, visit traderaid.com and macrovisor.com. And thanks again, everyone. I hope you have a great rest of your week. And remember, we've got Friday off, 3-day weekend ahead. Take care.